Today we have three special guests: Lloyd Becker from PVH Corporation, Cheryl Meyers from Capri Corporation, as well as Jenny Novoa from Gap Inc. Let's get started. Jenny, let's start with you. Can you give us an idea of who you are, your background, and Gap, as well as your role as risk manager for Gap?
Sure. Good morning or afternoon for everybody. My name is Jenny Novoa. I am with Gap Inc., which is made up of our Gap brands, Old Navy, Athleta, and Banana Republic. I am based in San Francisco, and we have a little bit over 2,000 stores and over 100,000 employees. I've been at Gap for 30 years. I came up through the claims side and then became the risk manager many, many years ago. And it's my role within the company is the responsibility of the insurance purchasing, risk finance, and safety and claims for all our brands worldwide.
Thank you, Jenny. Sheryl, can you go next?
Sure. Good afternoon, everyone. My name is Cheryl Meyers, the Senior Director of Global Risk Management for Capri Holdings Limited. Our brands are Michael Kors, Jimmy Choo, and Versace. I'm based in New Jersey. Michael Kors is here in New York. Jimmy Choo is in the UK, and Versace is in Milan. So hopefully I'll see you all in person on my next trip out there. My primary responsibility is the purchase and oversight of the corporate insurance program, all brands in all regions. We don't have as many employees as Jenny, but the 14,000 that we have keep me very busy. And then we also, part of my responsibilities, I also coordinate the ERM process, which I find so helpful in the corporate insurance program with all the knowledge that I get. And also I co-lead the company's business continuity efforts globally.
Thank you, Sheryl. Walter, please.
Sure. Hi, Walter Becker, PVH Corp. PVH, two main brands are Calvin Klein and Tommy Hilfiger. Recently had shed some brands too, including the namesake. Van Heusen is no longer part of the company, at least from a retail perspective, and Izod and Bass are other brands that we used to own that no longer. So I just recently returned to PVH in November of last year. I was with a private equity firm for about 3 years. And then prior to that, I was with PVH for about 10 years. So kind of relearning the company a little bit. Some things are the same, but a lot has changed over the years. But so kind of reintroducing myself to the company and try to figure out what things need to be done. Obviously, the insurance procurement aspect we manage in my team. We also have just begun kind of business continuity and crisis management planning. We do a travel risk management program. We do some security. We do a lot of different things that we don't necessarily have dedicated people within the organization. And we're about 30,000 globally as a company.
Thank you. You know, one thing we assume you guys in the same segment of the business, both in retail, fashion, we assume you have similar roles, but apparently your roles are quite different. So with that, you know, what's the implications of your different roles in your organizations? How was the process really work differently? So Sheryl, can you kick off with that question and give us some ideas of, you know, if you receive an insurance quote from the broker, how that works in your organization?
Sure. So just so to level set, I report to the SVP of Global Tax, Treasury, and Risk. It's sort of a new role for him. And when he took over risk, he was fascinated by risk management. And when I asked why, he said, because he does tax all day. So this is, he now knows how exciting it is. So when I do get a quote, the first thing I do is check to see if it's within my budget, which I estimated 6 months prior, you know, before any market changes. But then I also look at to me, the more important things. What are the terms? What are the conditions? Or the subjectivities? My limits, retentions? You know, I take a deep dive into those quotes. And if I have any questions, they go back to the broker. Once I'm satisfied that, you know, this is something we should move forward with, for the most part, I can bind once I confirm with my boss that we're in budget. But there are certain coverages, and it's mainly the coverages we actually buy through Lloyd's, where my CFO gets involved. Sometimes we utilize the captive. These are the higher limits. These are the the D&Os, the big policies. So if I get to my CFO with 1 day left in the current program and he has a lot of questions, he gets very frustrated and puts a bad taste in his mouth with insurance that why do I have a day and why can't I get my questions answered? So I think it's really important to understand that, we a lot of times have to go to our supervisors and they're running the company. It could take me 3 or 4 days to get 5 minutes with him. So, and I don't know if Jenny and Walter, you have the same issues, but when I get those quotes last minute, it's a scramble to get approvals.
So I would say it depends on my CFOs. So my last 3 CFOs have been pretty good about me. As long as I develop the strategy ahead of time, we agree on that strategy in regards to our limits, to our retention, and how we're going to go in with the insurance renewal, then it's all fine. But if anything changes within that period of time, so maybe something happens with the retention or the deductible, it goes higher, or maybe we're getting pushback on some sublimits or capacity or anything like that, and the strategy is totally changed or the pricing is totally changed, things like that, and I have to go up and explain to them because that's outside what we approved on the strategy. You're right. I have very little time to kind of manage through that and say, well, this is the reasons why this is happening, and why didn't I anticipate this? So a lot of that is that's the challenge of it all. Usually, as Sheryl has stated, the quotes come in, I review the terms and conditions. If it's within the strategy that's been approved, I can approve it offhand, just right away, except for the D&O policy. That has to be, I present that one to the board for their sign off. But other than that, it really is about confirming that the strategy is correct, that it's within the strategy, that I'm good. But I've had times when a CFO is wants to be a little bit more hands-on, and you're right. I barely can get 5 minutes within, any moment in time with the CFO.
Yeah, I guess I would agree. Cheryl's first look at the budget real quick, right? Just to kind of make sure that, and obviously there's some big variances there that obviously has to be communicated. I would say, just to kind of add to what you guys have already said, there's kind of this level of credibility that you want to build up with your CFO, that you're managing the process. And it's not, while it does sometimes come down to the last day where you get kind of like the finalized quotes, to the extent we can communicate what's happening throughout the renewal. If it's 1 or 2 kind of updates, like, hey, we've gotten a quote in, here's where it looks like it's trending, here's where we think deductibles are going to move, any change in terms and conditions. And it depends on the type of policy too, who generally CFO or controller or treasurers, but if it's impacting some other part of the organization where you can kind of let them know that this is happening, as well as, is there any changes that we should be making in terms of either reducing limits or buying more limits, obviously looking at cyber every year and trying to figure out whether that's the right limit for the company based upon trends that are happening. So those are things that we want to communicate as early as we can.
So in that regard, how would you advise some of the audience? Because I know most of the audience members are, brokers, people who work with us. How do you feel the expectations the brokers and underwriters alike should have from the risk managers, from your perspective?
I mean, I'm constantly, emailing the broker, where's my quote? Where's my quote? Where's my quote? Give me something. So as Walter pointed out, I just need to update, especially on the D&O. That's the question that, comes down from our CEO. Where are we with this? And, 9 times out of 10, up until 2 weeks before, I have 0 to go on. So I need to know, how is it looking? Are we going to be able to keep the retention? Are we going to be able to keep the limits? Is the capacity there? Is the pricing looking, how's that looking? So I just need to be kept updated so I can tell them this is where we are.
I think one of the things I always give feedback to my various partners in the insurance world is just tell me what expectations I should expect. So if it's coming down the line in regards to maybe an endorsement being added, some sort of exclusion, or, hey, it's looking like they're going to start sublimiting coverage, things like that, I want to know ahead of time. Or, with cyber, I think I will say the insurance markets were good at telling us, look, you're going to see some massive increases. So we were ready and prepared to have those conversations. But I think early on is really important to tell us that messaging, as opposed to within the renewal, you're getting your quotes and you're like, hey, we're going to sublimit this, or, you're going to, we're going to have to throw a, 50% increase or something like that without any warning is very difficult when we've already set our budgets and started to set expectations within our companies. So as much information you can provide ahead of time, any hot issues that you're seeing and you want to ask us questions, we can start researching those questions early on, as opposed to a month before the renewal date. Things like that are really key for us.
Yeah, no, I would agree. I mean, that kind of starts with your kind of kickoff renewal discussion around, changes within your company, changes within the marketplace. The better the broker understands your risk, right? They can kind of give you some feedback as to things that are good about your risk and things that might need improvement, or at least the perception of improvement with the insurance industry, right? So that you can start to kind of think about that and formulate your communication to management as to, hey, here's why. I think senior management wants to know that we're getting the best deal we can get in the marketplace. We understand that there's an element of the product is somewhat an element of a commodity, right? And the pricing that they can get within the marketplace, but you want to be able to somehow differentiate yourself in the marketplace, right? And so how do you do that? And how do you communicate that to your senior management that that's happening? Then they kind of know at the end of the day that you've got the best pricing you can get given current trends.
Yeah. And let me just add on to that, Walter, is to say, give us feedback. Let us know, where you think we do really well, or maybe where you felt like we didn't, it wasn't, we maybe presented something that maybe you didn't feel we were strong enough. We can also provide that feedback to our management, say, hey, maybe we need to make more investment in fire protection or something like that. So right. we can provide that feedback. Otherwise it gets challenging for us to say, hey, this was just the number they threw at us, but all that money that you give us in our budget to do all these really good things, maybe it makes a difference, but I'm really not sure. That's what I always really love to get feedback from the insurance carriers.
Yeah. I think something else also what's really frustrating to us is when we sit in these meetings and we give all this information and we're told that you're underwriting our company, but then we get across the board increases or whatever terms and conditions change because everyone's getting it. But I just had a conversation with you that you're looking at me separately. So we need to understand the balance of how that works, because when my boss and I leave a meeting and then I have to tell him what happened, he gets frustrated that we go to London and we sit with everyone, but we appear to be just a number. So that's a little frustrating for us.
I definitely see you're saying, how do you help us understand how do we differentiate ourselves, not just as an average of the industry, right?
Exactly.
Right.
So related to your question, I see two questions in the chat box on this point. How much risk data or risk intelligence do you risk managers apply to secure the right kinds of insurance policies? Or do you leave this to the brokers or the underwriters or both of the latter? Meaning, do you deal with that yourself? Or do you leave it to the brokers and underwriters to deal with such risk data? How do you feel about that?
I want to start first and then Jenny. We look at all the data we possibly can, review it internally and then with the broker to make our decision. We love to see what other retailers are doing too, to make sure we're all in line.
Yeah, so true. To that point, especially the retail industry, we're very much about benchmarking. So our leaders like to know what everybody else is doing. So there's a lot of that. And so we're very much interconnected within the retail world. But from my end, I get access to a lot of information. So, I do a data gathering within all my brands to understand what their initiatives are. I have a great relationship with legal, so they let me know any new initiatives that are happening that have any risks, reviews that I need to do. I see the majority of the major contracts, any new product lines, new store design. So I see a lot of that information. So I'll take that information and say, okay, this is all within, the realm of how we're managing risks. And then I may have some things that, I have some, I want to have some conversations with the broker. Also, the broker is bringing me information too. What I'd like to see a little bit more is that the insurance companies, with the data aggregation they have, that they provide us more information too about what they're seeing, the trends and things like that. So we can utilize that information too. So Walter.
Yeah, I don't have a lot to add in that. I would say that we don't do a lot internally. We do lean on brokers to provide obviously some benchmarking. We like to do our own benchmarking. We try to basically mirror what our investor relations team and the companies that they're looking at too, right? Because they benchmark everything within the organization. We look at our own little piece as well. But the brokers can bring us some analytics around what are some of the limits that we should be looking at, right? Some are easier, property, things like that, and your casualty programs. But cyber obviously is one we kind of talk a lot about because that's pretty hot topic. But trying to figure out what is the right limit. And the data is starting to evolve around losses because not a lot of it's public, but that information, if they can feed to that, to kind of run some modeling based upon whatever metrics you might want to use, if it's number of records that you might have had, the number of transactions, sales, whatever it might be, that they can run through some modeling to give you some idea of projections on ransomware or a breach of some sort, to kind of give us some context to give back to our management, because they want to know, well, why are we picking this limit? It's not just because Gap purchases this much or Capri does that, right? That's helpful, but we also need supplemental information in addition to that.
Let's turn the table around here. That's what you offer the insight regarding what the brokers expect from you. But as far as what you expect from the brokers, I remember one of you guys mentioned, besides the insurance itself, you look for solutions that are not insurance from the brokers as well as underwriters. So maybe Walter, can you comment on that as well? What do you expect from brokers besides just the insurance solutions?
Yeah, I mean, I think, if you're a publicly traded company, I think a broker should be reading your 10K. Your broker should be on your analyst calls, right? And your earnings release, so that they become as knowledgeable as they can about your company and where it's, what has happened in the past, what are future projections, what are the analysts. I think the most, the best part of a call is not necessarily the kind of the rehearsed presentation that your management's giving, but actually responding to analyst questions and what might be interesting to them to understand about the company. I think there's a lot of crossover into the risk area too, of what analysts are looking at. So I think a broker should really be very tuned into that to understand the organization, as well as a touch base throughout the year, not just ahead of renewal too, because sometimes I don't remember things that have happened months ago, but if we had a touch base, they can kind of get up to speed on things and where we're happening. So the most informed broker, I think, becomes pretty effective for us.
And Jenny, I remember you also said there's so much value adding service brokers can provide besides just the insurance. Can you add on some comments from that perspective?
Yeah, I mean, again, the brokers are, have many clients have across industries, and there are things, that cross over into our industry from other industries. So their knowledge base is really key to us and bringing that to us. But also we have so many things that are non-insurance related that, we just need expertise on. We need their assistance to kind of come in. And it's not an insurance solution. It's basically a risk discussion. What have they seen? Have they seen other companies deal with it? I had a product line that my business is looking at, which I've never had experience with. And so I said, hey, tell me about any other clients that you guys are involved in, so you can kind of tell me, what do I need to do? How do I need to look at it from a contractual standpoint? Were there any claims that you guys saw that I need to manage through? And how do I reduce that risk? Those are the conversations I'd like to have. The insurance side is the insurance side. To me, it's like, that's like maybe the third, fourth, fifth thing down the line of what I'm looking at. I want to manage the risk as much as possible and then have the backstop of insurance.
Any comments from Sheryl?
No, I mean, I think Walter and Jenny pretty much said it. To Walter's point about the 10K and the brokers, I also, get frustrated when I'm on my D&O calls and it's obvious that they weren't on an analyst call and they didn't read my 10K. So, and I know everyone has so much going on and they have tons of clients. But, when we're talking about things that are readily available, on the report that's on the website, I asked, please just take a look, before.
Right.
Because now my head of IR and CFO get frustrated.
Like it's like interviewing somebody and they haven't done their research on the company, and then you're asking them questions and they don't even know. Like those are things that today's world of just information that's out there that you can get.
Yeah, I get the eye rolls from the CFO across the table. I'm like, I don't know why they didn't read it.
Yeah, that's a great point.
So do your homework before you come to the meeting.
Yeah,
because I did mine.
Yeah,
wonderful. I also remember you guys mentioned, in terms of the aggregation of data across industry, across the globe, if they see more than you do, because you see one segment, one industry, one company, they see across different companies, across different industries. If they can help you with that aggregation, how would that be helpful to you in terms of your job?
Well, I had given feedback to one major insurer as they were presenting to a group of us, of risk managers, and it was all this great information about claim trends and things like that they were seeing. And I said, wonderful, this is great information, but tell me, how do I take that information and how do I manage that within my organization to say, okay, what is it that we can do to reduce our risk to that situation? Is it better? Was there something within that, let's say that those claims that we can reduce that exposure in a contract? Or maybe it's how we perform that activity or whatever it may be. But the insurers have so much information from other clients. And again, we understand confidentialities and all that. But if you aggregate that data and say, if you were to do your contract and write it in, and think about these terms and conditions, you could reduce your risk because we saw it as an issue in these types of claims, things like that. I need actionable points is what I'm always looking for. Great information, but then give me actionable points that I can take within my organization to reduce my risk.
The keywords are actionable points, right?
Mm-hmm.
Give me the actionable points that I can
Correct.
take away and I use it in my organization.
Correct.
Wonderful. One thing I remember, Sheryl, you mentioned in terms of relationship, because we keep saying insurance is all about relationship. This is the core of our business, is relationship. I remember you mentioned example of when you sit at the floor of the underwriting room that you realize what that really means. So can you give us some ideas of what do you think is the true meaning of relationship?
Yeah, so for years, we give information to the underwriters, we get a quote back, we have dinner, we have lunch, everyone's happy. A few years ago, I was in London, I was having dinner with one of my underwriters with challenged business. There was hardly any capacity. If you could get it, it was a lot of money. And Lloyd's was shutting down some of the syndicates who weren't making money, and some of the syndicates were actually pulling out of this line of coverage. Now, I don't sell weapons, I don't sell machinery, I sell handbags and clothing, but I have a lot of values. So, the underwriter was telling me, he's watching his colleagues lose their jobs And anytime a submission hit his desk, he's taking a second look, is this going to cause me my job if I make a wrong decision? And it hit me at that point where this really is a relationship. Am I giving the underwriters full transparency of everything that I would want to see in writing a risk? And then are they giving me back what I need to know about what's happening in the market? So, I grew up at Sony, so I understand the value of the relationship. And it really hit me after that dinner that there was something more. You have to ask the question that happens next. Am I helping you, and am I giving you everything you need? And we're not just, trading, here are my sales, here's my data, give me a quote.
That is so well said. We tend to think insurance sometimes can be transactional. It's more of a transaction. But, at the end of the day, is your job as risk managers on the line. You guys are running big corporations. You're managing risk globally, which is put your life and your job on the line, as well as your colleagues. And the other way around is the broker who is on the account. So it's the underwriter who is on the account. So everyone's job and life is impacted by your action, by the action of who is in the middle of the transaction. So I think we all take that to heart. We will better understand the relationship as being the core of our business. It's really beyond just the insurance itself.
I think the key is for us to understand, and for them to understand us, right? Like what are our goals, objectives, challenges, and to the extent we know what theirs is as well on the insurance company side. Like, I mean, I don't, I'm not going to speak for everybody, but I think when you're doing business with someone, they're in the business of making money too, right? So it's not like I'm expecting to get a product from you for free, right? I know there's a cost of doing that, right? So to the extent you can convey that to me, then we understand it better, right? Like this is a long-term relationship. This isn't a plaintiff and a defense counsel just, trying to settle a case, right? You're kind of at each other for the best price, back and forth and settlement. I mean, you want your underwriter to be successful. They want us to be successful, right? It should be a mutual benefit, right? To everyone. And I think in the long term, that will be good for everyone. If you've got challenges and we understand it better, that's fine too. I mean, that's what we want to know.
So you mentioned challenges that transition right into my next question for you all. So can you give us some ideas on the daily challenges you see from your day-to-day operations? And I will ask more questions after that. So let's start with Jenny. What do you see on a daily basis? Some of the challenges you see on an ordinary basis, the normal challenges you see.
So, when I tell people and describe my job, I walk in every day and I really don't know how the day is going to go. My day is planned in the sense of meetings and this and that, but I don't know what's going to happen in the world or in one of my stores or in my distribution centers or anything like that. So my day can change in just in a moment. So, it is about the unexpected, but I think every day, is dealing with those challenges, what's going on globally. Hence why I wake up every day just to see what's going on in the world and read as much as I can just to see, it's like, is this going to be an issue? Because I got to be prepared to kind of manage that risk. I think that really that's the biggest thing for me is kind of managing through all the daily challenges of what happens, in my world.
I think
different from you, Sheryl and Water.
I do the same thing, Jenny. I wake up in the morning and I look at the news and I'm like, does this affect anything with my companies? But it's things like, prior to the issue in Russia and Ukraine, I didn't give it a second thought because our exposure is so small for our company. Yet I think I've answered 30 emails on it. So I have a much better understanding. The supply chain interruption, I work very closely with our global operations folks. I'm sure you guys do too. Where's my inventory? Because I want to be fully transparent to my marine underwriters that I know where it is and if there's any deviations because of what's happening. So it's constantly aligning myself internally based on what's happening in the market or the world to make sure that the insurers understand. So I understand, so they understand.
So
I don't
you
have much
manage
to
the supply
add.
chain. Walter, go
Yeah, I don't have
ahead.
anything to add other than I think that's what just makes our jobs pretty exciting too, right? Because you just don't always know what's ahead for the day or the week, right?
So for anybody in the audience who's looking for a opportunity in the risk management industry, this is a very exciting job. If you ever want to be a risk manager, those three can tell you they have so much fun every day because the day changes from day to day.
And maybe fun
So-
wasn't the right
Right.
description,
Not the right
but
word.
Some days it isn't fun.
But
Right.
as I said before, it's better than tax.
Yeah.
Sometimes can be stressing, right?
It's definitely better than tax. I sit in those meetings and those are boring.
Cheryl, you mentioned supply chain. I was going to ask you guys, given the global pandemic for one, and then followed by the war at Ukraine, we have a huge interruption of supply chain, and you are in a business that rely heavily on supply chain being smooth. So how do you see from your perspective the supply chain risk as of today?
It's a huge exposure. And we've publicly disclosed the impact our company's had with supply chain disruption, and the continued supply chain disruption. We had too little inventory. Now we have a little bit too much inventory. Now we're dealing with other economic factors. So it is just a huge risk for us. And how do we manage that? And again, it's not necessary. It's not an insurance solution. I've been involved in dealing with having to find just additional air capacity, trucking capacity. And then, we've been very strict on our terms and conditions, our insurance requirements, but having to give some of that, back because we just can't get enough capacity to get our goods and to deal with the supply disruption. So I think that's been, that it's just such a huge risk for our industry right now.
yeah, I would say we have the same challenges. The other one that I hadn't really thought about too much, to the point where we were updating our property values, right, and trying to understand the cost to rebuild some of our facilities. Some owned, some leased, but you think about that supply chain and the cost of material, the lead time material, replacement of inventory, equipment, all of that. Tried to factor that into the values, right? And that obviously had a pretty big impact. Our insurer was like, did you guys think about this? Because you thought it was just going to be a year to rebuild. It's not going to be a year. It's going to be 2 or 3, right? So all of that, we didn't really think about that too closely until it was time to update values.
Any particular comments on what's going on in the world right now with the market conditions being so volatile? As you guys see the stock price being so volatile, so is the entire market conditions. How do you respond to that as a risk manager as of today and looking forward? It's a tough one. I know it's a curveball.
I think it's a greater concern to the company in the sense of, the economic, the economic conditions right now. I mean, we're not really as impacted with Ukraine and Russia, but that's having, effects, in Europe, and now we're dealing with inflation and potentially a recession, which means people cut back from consumer spending. So then we have to factor all that in within our world. Like, how are we going to take a look at, into, our profile in regards to buying insurance? Are we going to get pushback from the CFO that we need to cut costs, and having to explain that there's still risks, but, and yes, sales aren't great right now, but we still need to manage that, our risk profile. But how do we want to do that? And is insurance that, or do we cut back? I mean, there's all these things that we have to factor in when it comes to this challenging time. And, I don't know how many of us here, on this panel have dealt with inflation rising at this rate, during our times on this job. I don't think I have. As I'm thinking about it, I haven't. So how do I factor that into my discussions now?
I think, Jenny, you said that really well. With everything going on that affects the company, how does it affect what we do? And that's going to be a really interesting balance that I think we kind of look at over the next, 6 months to a year when we go through our renewals.
Yeah, I've kind of asked my boss, who's controller, to kind of push down information that he's getting, right? Because I think they're closer to the financial aspect and trends to try to keep us educated as to where that's going, as well as some of the decisions that management's making around that. So to the extent you can get that information, it's helpful in some of the things that we're doing.
I do have a few questions from the audience. The first one, over the past 3 years or so, given COVID, how do you feel the overall insurance market have responded to all your needs? I hope we have responded to your needs to some degree, if not all of them, but how do you feel based on your experience in the past 3 years?
So COVID is such a challenging word for us in the retail industry with big, with having stores and distribution centers and trying to manage. For us, really what it was kind of it was a non-insurance really event for, I would say, for most of us. And that really is because we were trying to deal with regulations from every state, every city, the CDC, OSHA. I mean, we were trying to manage regulations and trying to implement that across 50 states and then worldwide, and then trying to manage based off information and ongoing information, changing information. So I don't know whether the insurance industry really, there was nothing that I would refer to. I mean, to spend, 3 times a week, trying to deal with, should we put up, health guards? Should we wear masks? Are we not supposed to wear masks? How long are they supposed to quarantine, not quarantine? Now we have to report this information to the state. And then we would get some random questions from the, like our comp carriers about information. I'm like, that's the least of my worries at this point. I'm just trying to manage all the regulations. So that it became such a dirty word for all of us because we just spent so much time dealing with it. I mean, Cheryl, your thoughts on
I mean, everything Jenny said. But from the administrative part, I think the insurance industry, listen, this is Lloyd, so we get everything we need. Domestically, we don't really get our policies in a timely manner and they're not correct. I think as a whole, the insurance industry really stepped up to the plate when everything shut down. Mm-hmm. So while we were working on regulations and trying to figure out what to do with our employees, we were able to renew and we were able to communicate, which I think was great.
Yeah, totally agree.
Especially for Lloyd's, which is such a face-to-face business.
Thank you. We appreciate that comments.
Yeah, I mean, there was definitely the time frames to get things done was much longer, right? I think the days of where you had an underwriter that could go and round table the risk or talk to supervisor or management around it, those now had to be what perception was. They had to have more formal conversations with Zoom calls and all that. So it definitely took longer to get decisions done. But I think all industry and companies were trying to figure out, how to operate in this kind of remote environment. So I think they did as well as anyone else.
We're proud to say when COVID hits, we pivoted quickly towards online platform, and I really keep everything going, even though the room has been shut down for a little while. So I'm really proud of the fact we moved quickly towards making it work for our clients. Next question. This is from John Bell. Do you put pay for performance matrix in your contract with your broker with requirements for timely quote deliveries?
So I do not. Part of my job is to manage the broker. So if they don't perform, I will be screaming and yelling, but it's not part of the contract.
Yeah, I believe in paying a fair fee for their services, and my expectation is that they're going to perform to that fee. And if they don't perform, then you go to RFP. I mean, it's as simple as that. So I don't do pay for performance. I do put, my expectation is we do have certain metrics. We have regular touch bases. I do give them a review after the renewals to go through what I think went well and what didn't go well, or where we need to improve. Did I feel a certain line didn't have really good communication or things like that? I give them that direct feedback, and each of the brokers for each line sits in front of me and I give them the feedback so that they hear it. I'm given feedback that way within the company. So I do the same thing for all my external business partners.
Yeah, we don't do pay for performance. I think I did that once, like in another lifetime. It didn't work very well. But I think that, to Cheryl and Jenny's comments, right? It's a lot about, like, this shouldn't be an annual discussion. There should be things, if you just got done with a renewal and you didn't like the way it was handled for some reason, then have that discussion, right? It should be an open dialogue. I think they want to be able to meet our needs too. So whether they're initiating, we're initiating, it should be happening. Again, I think this goes back to my earlier comments too, because I've had senior management supervisor ask me, like, how do you know your broker's doing a good job for you, right? Like, how do you know that question's getting, like, how do you answer that? And yes, you can say, well, listen, they got reductions, right? Well, maybe reductions aren't happening because something's happened in the marketplace. So does that mean they're doing a bad job if you had an increase? Not necessarily, right? So my answer has always been, if I feel like they know my risk, right, extremely well, right, from a positive and negative perspective, and have presented it, moderated meetings with underwriters, however it might be, and I feel at the end of the day they represented me in the best possible manner, then I think I'm getting the best possible program structure, pricing, all of that. So that's kind of always been my answer, because I think it's sometimes really hard to quantify when asked that question.
Yeah, that's fair assessment. So there are quite a few more questions, so I'll be really brief, and I'll pick maybe a couple as we're running out of time. Next one, how often are you presenting to your board of directors and or audit committees? And what is the focus of such presentations and matrix discussed?
So we present once a year, but it's usually very specific to the D&O.
Same here, D&O and cyber.
Yes, I will probably be this year.
Yeah.
Yeah, so I just kind of recently returned. So I guess historically, I was part of the enterprise risk management team. So that would produce a report, and that would get presented to the audit committee. And then periodically we report on D&O. We don't really get a lot of requests for information on the D&O, but we do produce a document that summarizes it, that goes to our general counsel, but we don't present.
So next one, are there any common frustrations you have with broker services, in general, and other areas where you would want to see improvements from the brokers or expansions? I think you comment on that, touch on that briefly, but this is asking any common frustrations you guys may have with broker services and where you can see them being better in the future.
I mean, the biggest thing for me is communication, but I always give immediate feedback to when I don't get great communication in regards to stuff. And when I've had brokers that just won't, it's just not, and maybe it's not their style, or they just don't want to communicate as with, maybe we're just not a match, I basically replace them. It's as simple as that. I just really believe it's a partnership, and we just have to work toward this thing, and they're there to make my life easier. So if we're not going to work well together, I just want communication. I think the other piece is really benchmarking. Us retailers, it's not that we're going to make a decision based off benchmarking. It's just that our management likes to know what everybody else is doing, but I always say everybody manages their risk different. I'm not going to buy insurance because Sheryl buys her way. It's just they just want to know.
Yeah, no, exactly. My former jobs were manufacturing, and risk managers didn't talk to each other. Retail's a whole different ballgame. They just they like to know what everyone else is doing. So to get that data is key. But as Jenny said, if you're not a good fit for my team, I'll replace you. Nothing personal, but I need my business to be the way I need it to be.
Mm-hmm.
Yeah,
we
no, I
rely
think
on
just,
them as a partners, right?
yeah, I think personalities, right? How you like to work, how you like to communicate, I mean, I think that's just a big part of it, right? So that your broker has to kind of figure out who on the team should be, right for you. That has nothing necessarily to do with technical knowledge or anything like that. And I would say, just to echo Jenny's comments around kind of communication, obviously there's a lot of, there's always been movement within the industry, but there's a lot lately. So as your teams kind of change, that you want to know as well. I've seen where my lead person, it's a few weeks away from renewal and that person's moving on, right? And it's like, those sort of changes in anticipation, I get it. It's very challenging. It's happening internally with us as well. But that is the biggest piece right now from a communication standpoint, is figuring out who's going to be on your team and who's next in line to step in.
Building your bench is key.
Building a bench. I heard that keyword, building a bench and benchmark.
Yes.
And that bench needs to talk to other members of the bench.
Mhm.
I love it. I love it. I know you guys have such a large amount of wealth knowledge, and you can talk for days about your experience. The challenges, we are out of time. We do have the recording available on our YouTube channel. You can share with your colleagues and you can watch again. You can also reach out to the speakers on LinkedIn. They have the profile, pretty high profile on LinkedIn for you to check with. I want to thank you, Jenny, Sheryl, and Walter, for your insight, for sharing with all of us the wealth knowledge you have, as well as sharing with us the tips and where we can improve as industry. Again, thank you so much. And for next Tuesday with Lloyd session is July 26th, focus on marine. In the meantime, let's stay connected and stay healthy. Thank you so much again, everyone.
Thank
Thank
you.
you.
Thank you.